As you've had a chance now to talk about the bank's new strategy with some of your largest investors, and it's fair to say some of them are deeply skeptical. What's the hardest question you've had to answer?
We've made two strategic decisions in the first 100 days. One was to sell to a deconsolidating, non-controlling position in Africa. Mm-hmm. Barclays has been in Africa for over 100 years in places like Kenya and Uganda. To make that decision to pull back from the continent has been very, very hard, so that's a tough question. And then the second one is the investment banking industry. Our strategy is to be a transatlantic consumer, corporate, and investment bank, with our anchors being New York and London, the two financial capitals of the world. Investment banking as an industry right now does not cover its cost of capital. So if you look across all the investment banks, on average, they do not generate a sufficient return to earn the capital that they have. That's a fundamental flaw in the financial system, and it's a tough question to answer. When is that going to change?
It is indeed. As we welcome Bloomberg television viewers and radio listeners around the world to this conversation with Jes Staley. Jes, I'm going to say that I'm surprised that you didn't add a third difficult question there, which was the dividend cut. It came as a shock, that's fair to say, to many shareholders. Why cut the dividend when it saves you roughly just about $500 million a year, and there's such a strong shareholder preference for income in the UK, more so than in the US?
One, we will continue to pay a dividend, but yes, we did reduce the dividend by roughly 50% for 2 years, 16 and 17. We have a core franchise of our consumer credit card business, corporate bank, and investment bank that is profitable today. It generated last year about 11% return on equity. We have a very large non-core business. We're getting out of all of retail banking in continental Europe. We've sold our retail business in Italy. We've sold it in Spain. We're in the process of selling our French business. We've gotten the investment bank essentially out of all the emerging markets. We closed 9 countries in January. So to do that, it's very expensive to close and sell all these businesses. We have to get that non-core business essentially behind us in 16 and the early part of 17. And in order to have the funding to do that and have no constraint, we reduced our dividend for 2 years. But when we come out of this process, we will have the ability to pay a very significant dividend going forward.
Here's what some people don't understand, though. Your core business generates £25 billion a year in revenue and earns a pre-tax profit of almost $7 billion. I don't think you can sit here today and tell me what you're going to earn on a pre-tax basis 2 years from now. It's pretty hard, right? So why wouldn't you take the other side? Again, if we're talking about not that much money, why wouldn't you say we're not going to cut the dividend, we're going to maintain, right, maybe not the love, right, but the support of our shareholders, and if I'm wrong by £1 billion 2 years from now, I'll do a small capital raise.
We have the expense of closing non-core, which is not insignificant. We still have conduct issues. If you look at
it's a cushion, in other words.
It's to make sure that the management of Barclays has all the resources they need, financial and otherwise, to get this bank, as we go into 2017, in a position where its results clearly will drive our stock to a level over its book value.
All right, now let's talk about Africa, because you made the point. There's been plenty of second-guessing already about your decision to sell the majority stake in Barclays Africa down to a minority position. I'm not going to force you to explain why, again, you've done plenty of that over the past 10 days. But I will ask you this. If somebody came to you with a credible, funded, above-market bid for the whole thing, would you sell it?
Obviously, we would look at it. Ultimately, the decision to sell will be the decision of our board of directors. The idea of keeping some optionality in Africa is attractive, but for sure, at some point, there's a price where a strategic sale might make sense. We need to do that in concert with the government of South Africa and with our other shareholders of Barclays Africa. So we've given ourselves time, 2 to 3 years, to get the sale done in a way that protects the franchise of Barclays in Africa, because it is a separate bank, and do it in concert with the South African government and with the other governments that we deal with across the continent of Africa.
Has anybody approached you with such a bid?
There's a lot of
such a bid.
There's a lot of interest that's come our way
for the whole thing.
There's a lot of interest that has come our way, and let's see how this evolves over time.
Would it make a difference either way, Jes, if that bidder were Bob Diamond?
You know, I don't think Bob has got the financial capability to do that. But there's been a lot of interest, and let's see how this evolves over time.
He could put it together.
Let's just see how it evolves over time.